With one magical piece of plastic, we can have access to our entire financial system just by a swipe of a card. That is right, guys. In today's video, we're going to be talking about debit cards. We're going to be talking about credit cards and really the difference between the two, because there is a very, very big difference. Now, debit cards and credit cards look the same, but they work completely different. When it comes to a debit card is linked to an actual account, which is the big thing, guys. This is a payment method that is alternative to cash. It actually uses the debit card that is linked to a financial institution's checking account or money market account, depending what you have. Now, debit cards, there are a couple different debit cards that we're going to be breaking down. Number one being the bank debit cards. Now, most banks, most credit unions do issue debit cards. And again, they are linked to a checking account. Now, the caveat to this, guys, is the checking account is linked to your actual money. So if you're making deposits, if you have employer direct deposit into a checking account, it is your physical money. It is your ability to go ahead and pay bills. When we look at the budgeting, it is that net income, it is that take-home income that you do have within there. Now, the card link to the account can be used for purchases, and of course, the money is directly out of your account. Now, debit cards also come in a form of a prepaid card. Now, a prepaid card is similar to a debit card, except you're loading funds onto the card itself. So that is where the prepaid aspect comes in, is let's say you want to have an available limit on your prepaid card of $500. You put $500 in the account, you can borrow up to that $500 that are in there, but the funds have to be preloaded on the card to actually work. When the balance get low, you have to put more money in the account to actually be able to use the card. Now, with that being said, guys, prepaid cards are a lot of different places. We see them with Green Dot. We see them with a bunch of different ones that are available in stores. Most of them do come with a fee. That is really one of the things, guys. Some of the prepaid cards have severe limitations to them, and some of them do have fees that you have to be kind of cautious about. Now, some of the pros of using a debit card will help you track your spending. Since you use the money that is in your bank account to pay for things, it is, again, just an alternative method than using cash in those situations. You can set up alerts to monitor the cards. Again, with this, there is a form of fraud protection that kind of protects debit cards, and also the money that you have in there, you can actually monitor your debit card. Now, it doesn't pay interest. This, again, is kind of different, because we're seeing a lot of debit cards that do pay interest on the checking accounts that they are connected to. We're also seeing a lot of accounts that do offer rewards on debit card purchases, which again is a little bit different. Now, of course, debit cards are also the gateway to ATMs, guys. If you do need the greenbacks, if you do need that cash, the debit card is the way to get it and the access of the ATM. Now, with the debit card, of course, there can be cons, which we're going to look at. Number one, guys, a lot of checking accounts do come with monthly fees. So to have access to that little piece of plastic that you have in your pocket, it could mean they're requiring direct deposit, they're requiring minimum balances. If you don't meet either of those, you might have a monthly fee. There's also ATM fees that you could incur. There could be overdraft fees that you incur. That is where, again, a lot of people do go to the prepaid card, because when the money is gone, that is it. It is done. Now, debit cards will not help you build your credit history. This is a well-known fact, guys, and there are, again, some very new fintechs that do have debit cards that build your credit score, but they actually do it in a very different methodology in a video that I'm going to cover at a later date. Now, you may be liable for fraudulent charges on your debit card. Now, again, this is really important to know, guys. If debit card transactions happen in the form of credit, chances are you're going to be reimbursed. You're going to be protected by Visa, MasterCard, whoever you use, as well as the financial institution. If it is utilized with a 4-digit PIN number, which is safe and secure, it is a form of two-factor authentication, because not only do you have the card, but you also have that 4-digit PIN that goes along with it. If you do have both of those, and both of those are used to access your funds illegally, or theft, loss, anything like that, chances are you could be liable, because it has that second form of ID. Now, also remember, guys, debit cards are linked to the checking account. Like I said before, debit cards are linked to the actual money that you have in your account, meaning if there is a fraudulent charge, if something does occur with a debit card, they have it and it is linked to your account and to the money that you have in there. Now, on the flip side of this, guys, we have a credit card. So credit cards offer a line of credit that you actually borrow against. Many credit cards will let you do cash advances, balance transfers, as long as you agree to pay the credit companies back. Now, a lot of people might say that credit cards are evil, credit cards are bad. Remember, guys, credit cards are just a tool that one you can use to make purchases on, very similar to a debit card, and two, this is going to be the way to build your credit. If you ever want things cheaper for your entire life, guys, it is going to be imperative to have credit cards, to have loans, to establish credit cards, and credit in itself. Now, if you're like me, guys, you want to pay off your credit cards, and this is kind of the caveat. Credit cards interest rate, regardless of the interest they pay, if your balance is paid off every single month, you do not pay interest, which is a game changer, guys. You don't have to pay interest and you don't have to carry a balance on your card to improve your credit score. You want to pay it off. Now, some of the pros of credit cards we're going to kind of break down. The Fair Credit Billing Act limits your liability on credit cards. Notice that is on credit cards. Some credit card companies also have zero liability if your card is lost or stolen, meaning they are fully protected. Definitely a massive, massive pro to the card. Also, guys, remember, even in relationship to debit cards, if your credit card is stolen, it is not actual funds. It is not linked to a checking account. It is not linked to the actual money that is within your account. It is linked to the line that the financial institution is kind of established for you. So if there is fraud, if there's something of that nature, they don't have access to your cash, which can be a game changer for most people. Now, credit cards also help you build history. Again, this is kind of with an asterisk after it, because if you're running up the balances, if you're not paying it off, if you're maxing out those credit cards, if you're over limit, this could also hurt your credit score, guys. You want to make sure, again, that you don't have a lot of the credit cards and you don't have a lot of the debt that is sitting on the cards. Now, credit cards also offer a majority of reward-backed credit cards. You can get miles, you can get cash, you can get rewards, you can get merchandise. You can get a ton of things, guys, that you really want to focus on. Credit cards can also be used as emergencies. Well, I don't really promote it at all. Credit cards are not used to be able to pay for an emergency. That is not the methodology behind them. You want to use your emergency fund, which we always try to save that first $1,000 to have that emergency fund. Now, some of the cons of credit cards. Number one, guys, be careful. If you're not careful, you're going to rack up credit cards and credit card debt. It is super easy to go ahead and get a credit card. Let's say it's with a $500 limit. You're going back and forth after a couple months of good payment history. All of a sudden, they give you a $1,000, $2,000 limit. Okay, well, now you might have a little bit more on your credit card. Now you're not paying it out for every month. Then they start with a $5,000, $7,000, $10,000 limit. And it really just snowballs from there, guys. If you are a customer and you're paying on time, you're paying off your balance, chances are the credit card companies will raise the rates on your card. Not really the interest rates. Sometimes they do raise the interest rates, but they'll also raise the amount that you can borrow on your card. Now, also with these guys, the fees with these can be exorbitantly high. When you look at late payment fees, return check fees, balance transfer fees, cash advance fees, foreign transaction fees, there's a ton of things that credit cards charge on a regular basis. So that raises the question, debit versus credit, what is the best card for you? Personally, guys, really based on the spending habit, how you plan to use it. In my opinion, I use a credit card for everything. Literally, the credit card is the tool. And again, it's not my savings account. It is a tool that gives me the ability to pay for the items I need while giving me a benefit back. Now, I know Dave Ramsey always says, you know what, millionaires never say that they relied on credit cards, credit card rewards programs like that to save money to become millionaires. That is true. And it rings very true. However, they can use them. And I guarantee you they do use them. The rewards, the perks, the benefits do come again with a price tag. If you're paying off your card every single month, then you're getting the rewards and you're actually using rewards cards for what they are meant to be. If you are carrying balances on your cards, chances are you're paying interest on those, which means you're literally paying in interest for the rewards that you're accumulating, which doesn't make sense at all, guys. You're just taking your hard-earned money, you're giving it to the financial institutions in rewards for it, or in return for rewards that are not even worth the benefit that you're paying for them. Now, this is important, guys. Sticking to the budget, paying off the balance. Again, credit cards are a tool. It is a good option if you're paying it off every single month, but I do not want you to get in trouble with those, which again, that is where we see a lot of people. They're not responsible with the cards. They don't use it as intended to really build up your score and build it up fast and build it up very strong. You need a credit card, you need a lower limit on the credit card, make a purchase during the month, make a payment during the month, pay it off in full every month. That is it, period. So never during a monthly period should you accumulate more or put more on a credit card than you can afford to pay in that month. And again, this is just regular purchases. When I talk about regular purchases and the credit cards, when I look at my Verizon bill, our Xfinity bill, our insurance, those are things that I would be paying out of my checking account or with my debit card naturally, because those are bills that we incur on a monthly basis. However, I pay those with my credit cards to get my rewards, and I actually have the rewards card through M1 Finance. I have a link right down below. So does it make sense? For me personally, the utilization of the tool to get rewards back. Overall, with the card that I have through M1, I've yielded about $1,000, I think around $1,200 this year that I would have never seen. And it's kind of crazy because to think a $1,200 return, I have a $100 cable bill. The rewards program that I have from this card paid for all of my Comcast and internet for the entire year. $1,200, $100 a month. That is right. Guys, the rewards program I got from one single card based on purchases paid for my entire bill for the entire year. That is the way that I like to do it. Now, using debit cards could definitely benefit from your budget. Again, making sure that you are paying them off in full. Credit cards can help with emergency expenses. Again, this is something that I do not believe in. However, if it is truly an emergency and you need a way to pay for an item, credit cards are probably going to be the most expensive way that you can borrow money. You could do unsecured loans. You could do a couple other things. Definitely look into that if you do have an unexpected expense. Now, credit cards also offer better fraud protection. This is entirely true, guys. Credit cards do have a different set of parameters when it comes to the fraud protection on the cards themselves. So is cash better than using debit or credit? Cash, honestly, is a really big personal preference for people. However, if you're not building credit, again, when you go to get an automobile, when you go to get a mortgage, when you go to get bigger items in life, guys, if you do not have credit established and a good credit habit established, essentially, you're not going to get approved for a loan. Even looking at the mortgage scenario, you have to have a minimum credit score to qualify. You have to have open trade lines to qualify. There is a lot of things that you do need to make sure that you get approved for the larger purchases in life. All right, guys, debit and credit, very, very interesting to see. Let me know in the comments what you guys think. Are you on the debit side? Are you on the credit side? And I will catch you on the next video.